The Real Investment Show.
And welcome back to the show this morning. So this whole interesting rivalry between, and you know, Brent labeled the show this morning bromance, and that's really not the case. FTX and Binance were huge rivals, and they have been in a long rivalry here for a while, trying to be kind of the king of the mountain, so to speak. And, you know, as is always the case, generally only one survives, and it's kind of like Thunderdome, right? So, you know, and in this case, it's going to be Binance that survives. And yesterday, we discussed a little bit about Sam Bankman-Fried, who is the CEO of FTX and was worth about $16 billion on Monday, probably now has a negative net worth as this is going to unfold very poorly. Apparently, there's about an 8 to 10 billion, and again, numbers kind of vary here, so you know, don't take a quote from this, but roughly there's a hole there of between 8 and 10 billion dollars that investors are going to be out a lot of money. People that have money invested in FTX are going to lose a lot of money. So, you know, those that were smart enough to get out, they got out with some of their money, but there's going to be a lot of people that wind up losing some, most, or all of their money as well. And this is one of the problems with investing in these, you know, kind of unproven businesses and, you know, things that become problematic. And there's a real story here, and we'll find out because, you know, as we talk, you know, and more through this, and then again, these headlines are going to unfold now for quite some time, but there's now going to be investigations into FTX by legal authorities, and if this was, as it appears to have been, a potential Ponzi scheme by the way that it works. And again, I'm not saying it was a Ponzi scheme, right? But the way that it was operated was very similar to a Ponzi scheme. And, you know, there's going to be a real risk here for Sam Bankman-Fried that he may go from billionaire to jailmate at some point. You know, we'll see what happens. But this obviously isn't good for a couple of things. One, it's not good for the industry as a whole. And you know, secondly, this isn't the, you know, thing that, you know, helps promote an idea. And again, these type of things, when they occur, you know, one of the whole premises of the whole cryptocurrency environment was it was going to be, you know, unregulated. The authorities can't have anything to do with it. And it's going to, you know, it's freedom from authority and regulation. Well, the problem is that when you have freedom from authority and regulation, these things type of happen. And this is where regulators, as is always the case, step in and start regulating the industry. So if your whole goal was to keep regulators out of your industry, this is not the way to do it, because when people start losing a lot of money, this is when regulators go, yep, we need to regulate that. We need to control that. We need to make sure there's legal framework around it, et cetera. You know, this is what this is why you have the SEC, right? The Securities and Exchange Commission. It didn't exist until after the 1929 crash, right? The stock market was this free, kind of unfettered Wild West prior to 1929. Banks were, you know, loaning money so that they could issue, you know, IPOs, and they would loan money to customers to buy the IPOs that they were issuing. It was all just kind of one hand in the same pot, right? And everything was fine and dandy as long as everything was going up. But then when the crash came, this is when the government said, yeah, probably need to regulate that. And that's when we passed the Securities and Exchange Act in, you know, the 1930s. And then have continued to apply more regulation to the industry ever since. And again, we keep having to add new regulation. Why? Because somebody figures out a way to do something. Bernie Madoff, that's a good example. And, you know, we wind up with new regulations. Enron wound up with Sarbanes-Oxley. So, we keep winding up. We have to keep passing new regulation to try to keep bad actors from doing things. And I'm not saying that Sam Bankman-Fried is a bad actor. I'm not saying that at all. Things went horribly wrong with the business model. You're creating a box, you're putting a token in the box, and you're taking the token out of the box and loaning it to something else, and you create this whole circular loop based on the same asset, and that eventually blows up. And it blew up spectacularly in this case. So the problem is that eventually this is going to come in and start to create a more regulated environment for cryptocurrency. But the problem here is twofold. One, the current sell-off in cryptocurrencies, Bitcoin fell almost $4,000 just in a couple of days here, went from 20,000 to 16,000. Bitcoin will probably find the bottom here in the next, couple of days once this shakes out. Ethereum and other cryptocurrencies also down sharply over the last few days. And these cryptocurrencies have just been a tough investment this year, right? They've gone nowhere this year. They kind of move up and down a little bit, but they really have not gone anywhere. And I guess, and part of the way that's a good thing, right? They haven't gone anywhere in the last few months. So they're not going down, except for the last day or so. But, this has been a real tough road for retail investors, right? And, in 2020, 2021, we talked about this whole idea of the retail investor, and, they had the tiger by the tail. And we warned then that, be careful thinking that you got the tiger by the tail, because the tiger, being Wall Street, by the way, Wall Street tends to get even. They figure the game out pretty quick. You may have Wall Street by the tail for the moment, but they tend to turn around and bite you back. And that's the way it was back in 2020, 2021, because these retail investors were, killing it, right? The IPOs and SPACs and, chasing meme stocks and, causing all kinds of ruckus in the markets, with the Robinhood app. And we talked about that here on the show. And we said, look, this always ends badly. And it has. Unfortunately, for a lot of retail investors, they had bought into a lot of cryptocurrency just last week. We had seen a big inflow into cryptocurrency just last week going into the midterms. Bought right into the crash. But this is following the crash in meme stocks, the crash in IPOs, the crash in SPACs. I mean, it's just been a devastating year for these more speculative assets. That's the way markets work, though. And this is the important part about, risk management. There's nothing wrong with investing in these things, right? Just control how much you put into them and be willing to suffer the consequences, but in an amount that it doesn't really change your lifestyle much if things don't work. And in a lot of cases, crypto hasn't worked, but in a lot of cases, a lot of these younger investors had the majority of their net worth in this idea that was to be cryptocurrency and this DeFi issue. And look, and again, I'm not criticizing cryptocurrency at all. I think there's an interesting benefit to this. It's going to be vastly different in the future. It's going to be regulated. It's going to be government controlled at some point, just because of things like what happened with FTX. This is what, again, as I said, this is what's going to drive that regulation. And we've been saying that for a while, is that eventually this is going to end up, it's going to be deemed a security. It's going to have to follow securities laws in order to protect investors. So this whole idea of it being this rogue currency that's outside of the confines of government control, that was a nice fantasy, but that's not going to be the way that it ends up, because of things like FTX. And you'll be able to point back to this event and say, yeah, that was one of the reasons why we are where we are now. But this is going to be a few years down the road by the time we get there. But when we get there, we can look back and say, yeah, here was a series of events that caused that. But again, there's a lot of good benefit in the idea of blockchain. We talked about yesterday, look, we got all these problems with the election. Go to the 2020 election. There was lots of accusations about miscounting of votes and ballots and all these type of things. And then just in the recent midterms, polling stations ran out of paper, and some machines didn't work, and this and that and the other thing. And there's just all these problems. And there's a lot of people they'll identify a problem and say Bitcoin solves that. Well, blockchain solves that voting problem. Somebody's just got to develop it. So there's a lot of really great benefits that will come out of blockchain eventually. And we're finally starting to see, some businesses beginning to operate on trying to figure out a way to make blockchain work. JP Morgan just recently executed a trade over blockchain, kind of the first test. And again, the whole benefit of blockchain is that the blockchain verifies the transaction. So where it starts, where it ends, and there's complete verification. You can eliminate a lot of middlemen out of the transaction. We talked about that yesterday. So, again, there's going to be a lot of great benefits, but we've got to go through this. This is the Wild West part of that asset and that technology. And very much like 1920 to 1929, which is the Wild West of the stock market, it eventually blew up and people lost a ton of money, and they didn't have, this is why we now have FDIC insurance, because banks failed, right? Now we have FDIC insurance issued by what? The government. So, as these events occur, see, when things go up, nobody cares. As long as people are making money, nobody cares. But these events, like the 1929 stock market crash, Enron, Bernie Madoff, all these type of things. This is what leads to more and more government overreach, government regulation. Why? Because you can't control yourselves. This is the problem. Be right back after the break.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
The end of the year is fast approaching. What will the new year bring? Join Richard Rosso, Danny Ratliff, and Lance Roberts for our year-end economic review special event, Tuesday, November 15th. How to address higher taxes in the new year. Should you delay your retirement in 2023? What will the midterm elections mean for markets? Register now at realinvestmentadvice.com for our year-end economic review special event with Ratliff, Rosso, and Roberts. realinvestmentadvice.com.